Hello everybody. Firstly, I'd just like to welcome you to this webinar where we'll be talking about the EU parliamentary elections and the effect they may have on the markets, particularly in relation to the euro and pound currency pairs. My name is Sasha and I'm a financial analyst from the research department at Fortrade. I'm delighted to have you with us. If you have any questions, please call us and ask to speak to a senior account manager who'll be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. And now let me explain what a market opportunity is, if you don't know. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple to understand opportunity to trade in the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by the research department on a daily basis according to market conditions. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis. That includes a pivot point and support and resistance levels. It's important to understand it's your decision whether you want to trade on market opportunities or not. So here's an example of a relatively recent market opportunity. Here you can see fundamental analysis on what's going on with the euro-dollar currency pair. You can see this is a downtrend opportunity over a weekly period, since our analysis suggests the euro would decline in value against the dollar. At the top you can see some geopolitical events and fundamental analysis that can influence the euro-dollar currency pair. When using a market opportunity, it's vital to look at the pivot point on which the calculations are based. In this instance, if the price reaches 1.1381 that you can see on the left hand side of the screen here, this shows the right moment in our estimation for opening a trading position, had you chosen to trade on this opportunity when it was active. You can see below the trend direction and the time period. It's also important that you know how to use the stop loss and take profit options. You have support and resistance levels further down. At these points you can put a stop loss and take profit, and on the right hand side of the screen you have calculations. If you close the position using take profit, you can expect these kinds of profits at the support levels in green. If the price is going against you, you can potentially have a loss of this amount at these resistance levels in red. So, EU parliamentary elections. They're held every 5 years, and members of EU Parliament vote to decide the new president of the European Commission. Since 1979, EU parliamentary elections are held every 5 years, with more than 400 million EU citizens having the right to vote. It's the only EU institution that is directly elected, and winning members sit in the European Parliament. Each country gets a number of seats according to its population, so a country like Germany with its large population has the most members, with France and the UK having the second most members. Although EU parliamentarians don't have a lot of power, they can reject the EU budget, and they decide and vote upon the new president of the European Commission. Despite its critics, the institution is significant and important in terms of the EU having some democratic accountability. Despite the importance of the EU, the turnout for EU elections is usually low, and EU citizens don't show as much interest as with national parliamentary or presidential elections. However, many political commentators and investors say that these are the most important Euro elections in history and could impact the markets like no other. So, what happened at the last Euro parliamentary elections in May 2014? Well, centre-right political parties took the most seats, but were short of a majority, with the Socialist grouping coming second, despite the fact that Socialists gained some ground on the centre-right European People's Party. Turnout was low at 42.54%. On June the 12th, 2014, Parliament voted that Jean-Claude Juncker be the next head of the European Commission. There isn't usually much of an impact on the markets at European elections. The main focus of the markets is whether stability will be maintained. If it isn't, then the euro and stocks might fall. The red line in the middle here is the day Juncker was voted head of the Commission. You can see a gradual increase in the euro-dollar currency pair in the days following. However, these are not usual times in the European Union, and many analysts consider there is potential for high volatility on the euro and the pound. So what can be expected this time? As far as the markets are concerned, investors are concerned about the disruption and potential obstruction that populist parties could cause if they make big gains and hold enough seats to block business in Parliament. This could cause serious political problems for the future of the EU and push the value of the euro lower. In the UK, the situation is also tense. The UK was never supposed to take part in these elections at all, since it was expected to have left the EU on March the 29th. The elections have turned into a referendum on the government's handling of Brexit. Opinion polls show that the Conservative government is on course for a highly embarrassing defeat, with Nigel Farage's new Brexit party set to win the most seats. This could put additional pressure on the pound in the days before and after the vote. Since the beginning of last week, the price of the euro has declined against the dollar and a basket of other currencies. Part of this weakness is in Eurozone economies, but most analysts agree that currency traders are nervous about the prospect of new right-wing anti-establishment parties and the potential for disruption, which has put some pressure on the euro. This may become more pronounced as elections come closer, and if populist parties make great gains, it will likely weaken the euro. On the other hand, if established parties only make small losses and do better than expected, the euro may go up in value. In brief, these are troubled times for the European project, the European currency and the pound. If the populist parties sweep into Parliament as a force, this might additionally affect gold prices, and traders may also decide to back the US dollar to turn higher as a safe haven instrument. Of course, we at ForTrade will be following any developments that affect all currency pair prices very closely, so please do get in touch with a senior account manager if you have any questions or want to take advantage of the trading opportunities that the EU parliamentary elections may present. Until next time, goodbye, and please join us again at ForTrade soon.